Welcome back to the Daily Crypto Deep Dive, and today we're going to talk about one of the most important and least understood narratives developing in global finance right now. It's a story that doesn't show up on the charts, it doesn't flash across your exchange app, and it doesn't trend on Twitter unless somebody deliberately pushes it. But it might be one of the defining forces shaping Bitcoin's long-term price, liquidity, and geopolitical relevance over the next decade. And that story is this: the growing evidence that China, officially or unofficially, may be accumulating Bitcoin again. This is not the China FUD story people are used to. It's not the China bans Bitcoin for the 10th time headline. It's not the mining ban. It's not capital controls. It's something completely different. And it's something that requires us to step back and look at how nation-states behave when they want assets without drawing attention to themselves. Because China's history tells us something very simple. When they want a strategic asset, they accumulate quietly, indirectly, and gradually, until one day the world wakes up and realizes they're sitting on a stockpile that took years to assemble. So today, we're going to walk through the evidence, the global context, the incentives, and what all of this means for your portfolio if China is indeed building a Bitcoin position behind the scenes. Because whether you love them or hate them, China is one of the most influential players in global economics. When they move, markets eventually feel it. And if they really are accumulating Bitcoin, then everything, from liquidity to mining influence to long-term price ceilings, changes. Let's set the stage. 10 years ago, China was the center of the Bitcoin universe. They dominated mining. They dominated exchanges. They dominated liquidity. They had huge over-the-counter trading infrastructures. Then, in what looked like a full-scale retreat, they banned exchanges, banned ICOs, tightened restrictions, and eventually banned mining completely. At least, that was the surface narrative. Bitcoin trading in China moved underground. Miners relocated, exchanges were forced abroad. The world assumed China was out of the game. But here's the interesting part. China is not out of the game. Anyone who follows Chinese economic policy knows that when they tighten something publicly, they often reposition privately behind the scenes. They restrict what the public can do, but they do not restrict what the state can accumulate. And over the last 2 years, there's been a growing pattern that suggests exactly that. From state-aligned research institutions publishing surprisingly pro-Bitcoin papers, to comments made by former officials calling Bitcoin strategic, to unusual trading patterns in Hong Kong, and the behavior of certain Chinese state-linked firms, the signal keeps pointing in one direction. China may once again be positioning itself inside Bitcoin, but this time as an accumulator, not a miner or exchange operator. Let's explore why. China is facing enormous economic pressure, a weakening housing market, a demographic crisis, rising debt, slowing growth, and the secular decline of manufacturing competitiveness relative to India and Southeast Asia. For the first time in decades, China's long-term dominance is not guaranteed. And when a nation with China's scale sees structural risk, it does what all large powers do. It diversifies its reserves. Traditionally, that means gold, foreign currency, commodities, strategic metals, overseas investments. But global geopolitics are shifting. The US is increasingly aggressive in its use of sanctions. Dollar dominance is being questioned. Chinese access to US capital markets is tightening. China wants buffers, assets that live outside Western control. And Bitcoin is the perfect candidate. Bitcoin sits outside the reach of any government. It cannot be seized by sanctions. It cannot be frozen by the Federal Reserve. It cannot be blocked by SWIFT. And for China, which has watched the US freeze hundreds of billions in Russian assets, the appeal is obvious. If you don't control the global financial system, then you hedge against those who do. This is the same logic behind China's massive gold accumulation. They've been buying gold quietly for years, reporting only a fraction of their real holdings. So the idea that they might apply the same strategy to Bitcoin is not only plausible, it fits their playbook perfectly. Now let's look at the signals. In Hong Kong, which China uses as a controlled international testing ground, Bitcoin activity has surged dramatically. State-approved Bitcoin ETFs were launched. Chinese institutions were given a regulatory green light to participate through Hong Kong channels. Trading volumes in the region have climbed, and this isn't retail speculation. This is structured, institutional, and controlled movement. Hong Kong is acting as China's proxy, a place where Western financial firms can interact with digital assets under the watchful eye of Beijing. This shift did not happen by accident. China wanted exposure without admitting it wants exposure. Then there's the mining story. After banning mining publicly, China's hash power never actually went to zero. In fact, various researchers found that over the following year, China regained a significant share of global mining hash power. Unofficially, underground mining operations continued. Hydropower regions quietly allowed miners back in during low-usage seasons. Local governments looked the other way as long as it didn't become visible. Why would China allow this unless they saw strategic value? The evidence suggests this wasn't an oversight. It was tolerance. China didn't want public mining dominance, but they didn't want to lose the capability entirely either. Next, consider China's private sector giants, firms whose leadership is tightly connected to the state. Several major Chinese corporations have been linked to large Bitcoin OTC trades, custody arrangements, or offshore acquisition structures. When Chinese corporations buy, it is often China buying indirectly. This is how they acquire stakes in African mines, rare earth operations, and even foreign tech companies without leaving a national fingerprint. Bitcoin fits the same pattern. Another signal. Chinese academic institutions, which do not publish without political oversight, have recently begun framing Bitcoin in national strategic language. One respected Chinese think tank called Bitcoin a global digital commodity with long-term geopolitical value. This is not retail speculation. This is messaging designed to shift elite opinion inside China toward the idea that Bitcoin is something valuable, something that could give China leverage in a world where Western financial power dominates. All of this paints a picture that's impossible to ignore. China restricted its population from Bitcoin, but that does not mean China itself abandoned Bitcoin. In fact, it often means the opposite. When China bans something publicly, they usually do it to control speculation and consolidate state influence over an asset, not to eliminate it entirely. Now let's talk about the incentives on a deeper level. If China accumulates Bitcoin, they gain three major advantages. The first is geopolitical hedging. If tensions escalate with the US, the European Union, or Japan, and they almost certainly will, China needs assets that cannot be frozen or weaponized. Gold provides that to a point, but Bitcoin provides it absolutely. Bitcoin is the only hedge against Western financial power that cannot be stopped at a banking level. The second advantage is leverage over global liquidity cycles. If China holds Bitcoin and Bitcoin matures into a recognized macro asset, then China benefits from global capital inflows during bull cycles. They effectively position themselves to profit from Western investment behavior. This transforms Bitcoin from a threat to a tool. And the third advantage is soft power. If China becomes one of the largest holders of Bitcoin, they influence the future of global digital money. Subtly, quietly, without announcing it. They don't need to endorse Bitcoin publicly. They just need to own enough that its existence benefits them rather than undermines them. So what does all of this mean for the price of Bitcoin? If a nation-state accumulates Bitcoin, price suppression is inevitable in the accumulation phase. They don't want Bitcoin exploding upward while they're still building their position. They want sideways movement. They want liquidity events. They want fear. They want uncertainty. They want Western investors hesitating. And we've seen exactly that. Periods where the market seems stuck without obvious cause. Periods of accumulation where long-term holders increase. Periods where large volumes move off exchanges. These conditions are perfectly aligned with what gradual state-level accumulation would look like. Now, I want to be careful here. I'm not saying China has publicly declared a Bitcoin reserve. They haven't. I'm saying the incentives, the patterns, the research signals, the behavior in Hong Kong, and the quiet tolerance of mining all point in the same direction. China is playing a long game with Bitcoin. And if they are, that has major implications for everyone listening. It means Bitcoin's long-term upside is potentially far larger than retail investors imagine, because if nation-states accumulate Bitcoin, they are not selling it. They are not flipping it. They are not using it for speculation. They are using it for geopolitical defense, which means it leaves circulating supply permanently. It means liquidity may tighten during strategic accumulation periods, making price action look weaker than it actually is. It means there could be sudden, violent upside when accumulation ends and price is allowed to move freely. It means Bitcoin may become part of a multipolar reserve system whether the US wants it or not. And, most importantly, it means Bitcoin is no longer just an investment. It is now part of the geopolitical chessboard, a piece that major powers are maneuvering around silently while retail traders fight on Twitter about short-term price movement. If China is accumulating Bitcoin, it will not remain a secret forever. At some point, perhaps years from now, China could reveal holdings the way Russia revealed its gold stockpile. Or China could allow Hong Kong institutions to make disclosures on its behalf. Or the truth could leak through financial documents, corporate disclosures, or geopolitical events that require currency flexibility. When that day comes, the world will see Bitcoin differently. Not as a speculative instrument, not as a risky tech asset, but as a sovereign-grade reserve commodity. Something that governments hold alongside gold. Something that gives nations protection from each other. And if China is doing this, you can be absolutely certain other countries will follow. In fact, some already have. El Salvador has formal reserves. The US government holds thousands of confiscated Bitcoin. Germany sells and reacquires Bitcoin strategically. Russia is rumored to be using Bitcoin indirectly for energy settlements. These are early steps. But China entering the picture would transform Bitcoin from a market asset to a geopolitical asset overnight. So where does this leave you, the listener? It leaves you in a market where the surface noise, the dips, the sideways days, the liquidations, the funding rate swings, is nothing compared to the deeper forces at play. This is why long-term conviction matters. This is why understanding macro matters. This is why ignoring panic headlines matters. Because while retail focuses on 6-hour candles, nation-states think in decades. China is not buying Bitcoin for this cycle. They'd be buying it for the next 20 years. And if that's the scale of the game being played, then the single most important thing you can do as an individual investor, a researcher, or a participant in this space is to understand that Bitcoin's destiny may no longer be shaped primarily by traders, exchanges, or even miners. It may be shaped by governments themselves. Make sure you're following the show, and as always, we will see you at the top.